What's going on, Money Morning Live? It's just about that time for you to slap together your peanut butter and jelly sandwich as lunchtime is coming to be. So why don't you go ahead, enjoy that lunch, and do it while you're watching Tom Gentile for the next hour with Power Profit Trades. Let's bring in Tom in 5, 4, 3, 2.
Power Profit Traders, good morning, good afternoon. Wednesday, January 19th. Glad to have you here. I got a big show for you today. We're going to go over a quick update of what's happening in the stock market and crypto. Going to talk about crypto for a moment as well. Brutal start to the week. And, coming into this morning, things look like they were going to turn around. We got a little bit of a pullback now. Markets are mixed. We're going to also dive a bit deeper into my free trading tools. As I mentioned yesterday, we're going to discuss the expensive side of the market and how to trade those. All right. So we're going to be doing something called high probability or high probability and high implied volatility. So if you were with Mark Sebastian in the last hour, we're going to take that a step further. And I want to add the level of high probability to high volatility. Also, charts by request. Give me your charts. We'll take a look at them later in the hour, as well as my top trading idea. So, Eric, how you doing this morning?
I'm doing well, man. Excited for the show as always. And one thing that I want to say, you just mentioned it, but I want to kind of nail it in. We're looking at your guys' questions the entire show. I'm here to collect those and bring them to Tom when it's time. So keep those questions coming. I'm going to put them aside so we don't miss you guys because, well, it's important to hit on those.
Yeah, what's also important to hit on is that I've been doing this, guys, longer than I haven't. I'm talking to the new folks out there. When I mean new, I don't mean somebody just stumbled upon our channel today. I'm talking about those of you that have been around for less than a year. All right, so let's talk about less than a year. Let's talk about maybe even the last 3 months. Right, this market has crested. If you have been a buyer since the crest of the market, guess what? You may be underwater right now in terms of trades you have. So I want to let you know this is not about the day. It's not about the week. It's not about even the month. It's about long-term success. And with long-term success does come short-term pullbacks. Short-term pullbacks in the market, short-term pullbacks in your stock situations. And I want to talk about that as we get into the market update. So it's important to realize that everybody has tough days. Everybody has tough weeks. I mean, wait till you see what I'm going to show you in a few minutes in the S&P 500. Because if you think you got a trade here or there that's down, even if you're in cryptocurrency, okay, in cryptocurrency, I'm not telling you to buy Bitcoin at 69,000. I'm not telling you to buy Bitcoin even at the 50,000 mark. In fact, we've actually been looking at Bitcoin pretty much where the levels are right now. I think maybe down around 1,000 points off of where the levels are now. That's nothing. That's nothing compared to where it's been. And it's amazing how it takes only a couple of days to see that quick turnaround. So, I want to make sure those of you that may be a little frustrated of how the year is going, okay? Again, we're 3 weeks into this year. This is nothing. It's a very, very small portion of what's going on in the long term. So if you got positions in the red, congratulations, because guess what? You're a trader. The key is to making sure you follow your rules in thick or thin, all right? And don't worry so much about the woodshed days like today. If you are too worried about the woodshed days like today, then I'm here to tell you you're probably taking on too much risk, and that's not what we do here, right? So let's start by looking at what I like to call triple stacks, all right? Triple stacks are pieces of the market where I'm looking for stock charts, for instance, that are showing some kind of a pullback. So, Eric, what you're seeing here, and I do this every once in a while, I want to take out, we talk about charts. We start talking about applied volatility a lot on this channel. I thought what I could do is stretch this a little bit more and show you something that no one else on this program or on the channel is going to show you. And that is my proprietary scans and how I look at charts just a bit differently. Okay. So I think it's great to complement myself, Mark, Kenny, and the rest of the gang. kind of give you another idea of how to look at the markets. This is the S&P 500 here. As you can see, and we're going back to September. We've got those lows. I showed you this yesterday, September, October. I'm just showing it to you in a different point today. Uptrend. So we've got an uptrend here over the last 100 odd days. But look at what's been going on since the middle of December. Now, I didn't see it back in the middle of December. None of us did. You know why? Because in the middle of December, we could not look forward. Just like today, we cannot look forward. We can only look behind us to try to get a gauge of where things are going. So the 100-day move up, but look at the intermediate short-term moves. We're starting to get a bit of movement back and forth, and we're going parallel. So for the last 30 plus days, we've gone parallel. But what I want you to notice is this bottom support line is intersecting with this bottom support line and the other bottom support line. And we're coming into an area of what I like to call triple stack compression support. That triple stack compression support for the S&P, well, it's right around 455, very close to where we are right now. All of these are converging, and it's giving us a great area of support. Will that support hold? Well, there's no guarantee. There's no guarantee in anything in the markets. But I have seen with my patterns, these supports hold time and time again. This might have a little bit to do with what our trading opportunity is for today. It definitely has a lot to do with what our trading opportunity looked like yesterday. So if you look at QQQ, I'm going to put triple stack on the Qs right now. Now, there's the long-term channel. Let's go down and run a channel test on the Qs. And you can see very, very similar to the S&P. We've got the QQQ power shares, which had that long-term trend up, but its intermediate term trend started going parallel, all right? That's kind of that pause in the trend, started back in, well, really started to turn right here at the end of November. And then we've got a shorter term pullback. All of these are coming together right down here, I want to say just below the 370 mark. Just below that 370 mark. And guess where we are right now? We're at 369.92. So around, if you really want a number that's a support number, it looks like it's around 367 to 368, but we're on it right now. So I mentioned a trade yesterday in the QQQs. All right, take a look at that again. And that was what we were looking at, was that 375, 380 call spread, all right, going out into February. And I was looking at that for $2.50 a share, or $2.50 for the spread. We're right on it right now, folks. We're sitting right on that mark. Okay, so that's the Qs. What does the rest of the overall market look like? Let me share that with you. So I'm going to go back to my stock list, do a quick little update, and then I'm going to come down to an area that I call channel test. This is something that I run on my software, okay? There's our channel test, once again, for the SPY. How about the bond market? All right, the bond market is showing something similar. However, remember we broke below the lows yesterday in the bonds. Well, I've got triple stack happening down here around 138. So 138 would be a triple stack low for the bond market. If the bond market hits 138 and bounces off of it, or if it continues to bounce where we are today, that is good for the stock market, okay? Because this chart right here, the one I'm showing you, is really what's driving stock prices. That and the perception of how the earnings quarter we're going into right now, that perception, these two things are what's driving the market right now. All right, let's take a look at USO. Now, USO has had a break. I talked about this yesterday. I'm going to bring it up again today. We're looking for some sort of triple stack selling opportunities in the oil market right now, because the oil market's moved very far, very fast. Long-term trend has actually been sideways, right? Going back into September. Intermediate's been sideways to slightly down. But look at this short-term move to the upside. It's coming up here, and we've got resistance, resistance, resistance all around. I want to call it the 62.5 area, 62.5 to 63 for USO. So if that does happen, I would expect some pullback, which would take us back into the mid to possibly high 50s for USO. Let's take a look at GLD. GLD, we mentioned it yesterday. All right, we mentioned the fact that GLD was having these higher lows, these lower highs, and we got the breakout that we've been looking for with gold. Right, it actually happened today. All right, we opened 930. We opened a little bit lower than we were in gold. We opened at 170.39. I was looking for a break above 171. Currently at 171.80, very close to the highs for today. Where is the resistance going to happen on gold? Short term, we're looking at about 172.50. Intermediate term, we're up here around 175.50. And then if you want to look at the longer term, we've got resistance all the way up above 178. This is what I've been talking about, how much I like GLD as the value play. Now you know why. This is the biggest position I have on right now in my personal, in our family office and trust portfolios, is in GLD. And GLD is making up much of my gains today. As I look at the markets and I look and see where things are, we went from positive, nice positive day. Everything's been pushed back down again, and you've got you've got areas right now as we're hitting the quarter to 12 mark here. Dow's down about 40, S&P is down about 6.5, and the Nasdaq is down it's getting up to about 0.5%, down about 64 points. Okay. Again, when I look at my long-term stuff looks like this. We talked about dogs of the Dow. They're off a little today. Intel, off a little today. Bank stocks, I own a few of them, off a little today. But GLD is really kicking in and pushing my day into a positive. All right. So there you go. That is GLD. If I were to take this just a little bit further, and I was going to do this yesterday. I ran out of time. I did it at 1 o'clock, and join me at 1 o'clock later today. In fact, my guest host, Jeff Beamer, is going to be talking about long-term, high probability trading opportunities. We'll get into that a little bit later, but I didn't have time to go through the FANG stocks today. So I wanted to spend a few minutes talking about FANG, right? So let's take a look at FANG. We'll start with Facebook/Meta. Again, where's the long term on Meta? Well, the long term happens to be down. Go all the way back to August. You see the highs there at 380. And now I'm showing you the same charts that I've shown you before with a difference. And the difference is channel stacks. Where are the channel stacks on Meta? Well, if you see what happened here with the long term down, the short term move, and we did get some channel stacks back around the beginning to the middle of December, right down here around 305. All right, we busted above that. There is no channel stack resistance, although we got pretty close to it and backed off. But we could be seeing some support happening, more of a double stack support happening right below today's lows. You want to take it down to about 318, 315 to 318, and you can see that double stack support happening for Meta platforms, right? But nothing triple. I'm not seeing any triple stack buying opportunities in Meta platforms. How about Apple? Let's take a look at Apple. Okay, the triple stack buy on Apple, because yes, it has gone gangbusters from the September-October lows down here at 140 to the highs that happened just a few weeks ago up here near 183. Okay, we've pulled back. We're pulling back again today. Here's where the buyers are sitting on the triple stack, around 165 right now. So yes, we're at 168, 168.73. You give it about 3.5 points down, and that's where you're going to see a multitude of buyers are going to step in based on the charts that we see right now. Triple stack buy on Apple at the 165 area. Amazon. There's no triple stack happening here in terms of trend, but if you're looking for a triple stack bounce, this is where it's going to happen. 3,100 looks like the area of triple stack bounce for AMZN. As you can see, we've got long and we've got really kind of long and intermediate lapped on top of each other. Some of you that follow these charts with me before, you take a look and you're saying, what's going on here? This is brown. Well, it's brown because we've got a long and intermediate term channel right on top of each other, and that's what the shaded colors are doing. Short term is down off of our all-time highs at 37.50. We've we've got an area down here I talked about yesterday at about 31.25. If we clip that, you do have triple stack buying opportunities just below the 3,100 mark. And I believe of all the FANG stocks that are out there, Amazon to me represents the value play in the bunch. Problem is, it's not cheap. It's not cheap in stocks. It's not cheap in options. So you got to look at some sort of spreading opportunity if you believe that that is a value play in your mind. Taking a look at Netflix, same things happening here. We look at Netflix and we're like, wow, where's the bottom at? And you got to go back and look. You can look at longer term charts and try to pick off some supports. But all the supports we've had since August of last year have been broken. And now we're sitting down here in an area which looks very, very interesting. Triple stack. The actual triple stack buy should have happened a week ago. It did not because we're above it. We're coming down into an area right now where the 510 mark represents the triple stack buy on Netflix. Right? Google, we are hitting some triple stack buys at the levels that you're seeing currently around 2,700. And then finally, Tesla. Tesla's nowhere near its triple stack buy. The triple stack buys on Tesla are going to come in somewhere around 850 if we were to slowly make that move back. So you got a couple FANG stocks that are really kind of showing up and giving us those triple stack buying opportunities. But as of right now, you still have a good half of the FANG that really that are not lining up with any of our contrarian signals that we see right now. So Eric, are there a couple stocks out there that you're seeing from the group?
I saw Ford come up and SLV. Well, obviously SLV.
Let's take a look at the two of those, and I'm going to look at them using our triple stack software. So let's take a look at Ford first. Right, everyone knows the symbol for Ford. Now, this is not a triple stack, but I have to still set up the chart. So when I put a chart in, the next thing I got to do is come down and run the channel test. And the channel test right now for Ford says that there is no triple stack. In fact, the triple stack for Ford is really right around the $21 area. Right, we're trading at 23, so it's going to need to pull back 10% before we see any buying opportunities in Ford, basis this particular strategy. SLV. Let's see what's going on with it. Well, the longer term trend that we see first off is down, but when we triple stack this thing, maybe we see something different. All right, so there was no triple stack buy at all right now in SLV. SLV is breaking out just like GLD. The only difference is that SLV had a double support down here around 20. Now, what was also going on was we were seeing kind of a low that happened where SLV broke away from that low about 3 or 4 days ago. So it's just extending. It's going to run into some resistance, all right? Going to run into resistance for SLV just below and just above 22.5. So we're going to run into some resistance here in the next couple days. We get above 22.80, and we're going to make a run for new highs, at least the new highs in SLV over the last several months. Anything else you see, Eric?
Well, you mentioned it, and we had a few symbols get thrown in there. Remember, we are getting to those at the end of the show as well, if you guys want to see your symbols looked at. But, I mean, we also had NVDA and Netflix thrown into the chat.
Let's take a look at we looked at Netflix already, so let's go ahead and look at NVIDIA.
Let's do it.
And then we'll switch gears. So NVDA. And again, folks, we looked at a lot of these same symbols yesterday. It's just I'm showing them to you in a different light. Here's NVIDIA, and we're seeing channel after channel after channel. But when we add all three of these together and look for a channel test, okay, now here's one that I actually like. I don't like it right now, but it's setting up really nice. You got a long-term uptrend. You have an intermediate-term pause, and you have a short-term propulsion. And if you look at support, somewhere around, we're going to say just below and just above 240. So really, I mean, you got to go a little wide on this one. So let's call it the 230 to 250 mark. And really 240 is going to be right in the middle. We're going to start to see that triple stack support building for NVIDIA NVDA. All right. So That being said, I mean, when it all comes down to it, guys, in the stock market, we're seeing, we talked about it at the top of the show. There's some red on the screen. There's red on my ledger. Okay. There's red in some of my trades, but there's also green in some of our trades too. For our search strike folks, we just had a 53% profit on our Halliburton straddle, and the straddle is, we're doing that regardless of market direction. So that's exciting, and we took some profits off there. We've got several other profits on the strategy I want to talk about today with you. And I'm going to get to that here in a moment. But before I do, let's talk about crypto for a moment. All right, so cryptocurrency, I want to show you the chart I shared with you last week on crypto. And this is the chart right here. All right, so Bitcoin. And what I was talking about here is I was talking about something called darknet. Guess what darknet utilizes when we see these buys and these sells, and this buy and sell and buy and sell, and I've got a buy and a rebuy that happened over the last couple of weeks on Bitcoin. Guess what technology is used to create these signals? I'll tell you. It's the exact same thing I just showed you. It is triple stack compressions, triple stack buys. We had a triple stack buy. We had another triple stack buy on Bitcoin, and those were both happened here just in the last week. They are independent of themselves, but I do sometimes see multiple triple stacks. And this is exciting because I do see a lot of stuff that's kind of building in the cryptocurrency environment. And again, time will take place. But let's take a look and see what's happened with Bitcoin, because it hasn't been much that's gone on with it here since we last talked about it. Here's our cryptocurrency charts. And if you take a look here, we're still kind of bobbing along. I wanted to show this to you in Fibonacci. Kind of bobbing along here. You can see the lows that were happening around 41, and these are closing lows. All right, 41,056. The closing high that occurred back in November, 67,549. We're right back down to that area. And you look at this, you go, oh, Fibonacci doesn't work here because we're back to the 100% pullback. Yeah, you might be right on that. But when you turn and look at the chart this way, what you're seeing is what I've been showing this morning. Triple stack buying opportunities. All right. So before we switch gears, we start talking a little bit about options. I want to show everybody one more thing. Now, this is also a contrarian indicator I want to share with you. I do something called a high-low ranker in our option software, because tomsoptiontools.com is not just about options. Again, when you're trading options, you're trading them on the underlying. So we look at several different things to help us get ideas on the underlying. Some of those are price-based on the assets, and some are option-based based on, for instance, implied volatility. We're going to cover implied volatility in a moment. But take a look at these top 11 stocks. This is the S&P 500. Now, I have 500 stocks here. If I scroll through them, all right, what do these top 11 have in common? Well, since the beginning of the year, they're hitting new all-time highs. We're talking about things like Chevron. So take a look at this. Energy, technology, not a lot of technology, but we're seeing mining, all right? ADM is in here, all right? Grains, Lockheed Martin Defense, Pioneer Energy, Hershey, chocolate, all right? Here's one that's interesting, Las Vegas Sands, because it's gotten a big bounce off the beginning of the year. And then you got more energy, you got more foods, and you got Northrop Grumman. So what we're seeing on the high side is a mix of energy. We're seeing a mix of defense and a little bit of mining, a little bit of gold and silver thrown in there. So that's the big points. What I wanted to also mention is only 11 stocks in the S&P 500 are hitting new all-time highs. If you want to look at the all-time lows, ones that are hitting zeros, let me come back up here, and I'm actually going to change this wizard criteria. And let me run the search, and I want to share with you what's on the lows. So what's on the lows, if I flip this over, check this out. Well, one more time. Oh, you know what? I got to make this really easy. I got to show you zeros, not 100s. We want to look at zeros. So with the highest close, you've got now, in this case, Campbell Soup's kind of ran up to the top here just in the last few moments. But if I run this and flip it over, let's try to flip this over here. where I'm looking at those lowest closes. It's not going to flip. I'm going to have to just go to the bottom and show you what I'm talking about. See these zeros? We start at number 364 of 500 stocks in the S&P 500. So there's roughly 335 stocks. No, let's try that again. There's roughly 135 stocks in the S&P 500 that are hitting new lows for the year. Compare that to 11 stocks that are hitting new highs for the year, and you can see the high-low is skewed dramatically. I actually see this and look at this as a contrarian opportunity, all right, a shorter-term contrarian opportunity. I wanted to share that with you guys, that a lot of the S&P has just really gotten hit hard as of late. All right, so, before I move on to Eric, we talked about Bitcoin a little bit, and we talked about cryptocurrency, and we talked about these double bottoms. Let me tell you guys something. All right. I got something. I didn't have time to do a crypto on Monday. Well, I didn't have time. We were closed. We were closed on Monday. So I thought rather than wait until Monday, I'm going to take my Friday and I'm going to come in here at noon on Friday. And I'm going to do a crypto special with everybody on Friday. And let me tell you what I'm going to do on Friday that I haven't done before. I'm going to go into my Coinbase account. And I'm going to make the biggest crypto purchase that I can on Coinbase, right? We all have limitations on Coinbase, but I'm going to make a big purchase. It's going to be a six-figure purchase. So if you guys know me, I'm not, I have pretty low cost basis on crypto, all right? Some people call it luck. Some people call it me being in the right place at the right time. I like to call it maybe a little bit of luck, but you know what? You don't make money by being lucky in cryptocurrency. You got to study it. You got to start to understand it. You got to learn how to trade it successfully. And I'm going to share all that with you, but I'm going to take it one step further. Other than spotting opportunity and creating that alternative trade, I'm actually going to go into my Coinbase account, six-figure buy. I'm going to do it live. I would love to do it now, but I'm going to wait till Friday. I'm going to wait until somewhere between noon and 1 p.m. And I'm going to do this live with everybody. So all of you are going to be able to be seeing me put my money where my mouth is. And I'm going to do as much as I can. And you'll see. We all have limitations on what we can do on a daily basis, but I'm going to max out my limitation. And I'm going to do it live so you guys can see how easy it is to do this.
I like this,
I'm also
Tom.
going to talk about Say again?
This is a great example that you're giving everybody. First of all, you're doing, you're doing a big purchase, which everyone is going to like to see. It's not what we typically see here on any of the shows. And, like you said, you're putting your money where your mouth is. So you're showing that you're doing what you're talking about. This is going to be fun. I can't wait to be there for this one because I'm going to be there with you on Friday as well. So I hope everyone that's here in the chat, I know that they just put it up in the announcements. So all you got to do is click on that and you could sign up to be part of it. It's going to be fun.
Yeah. Yeah, get a special event, guys. Now, Eric, do they have to sign up for this event?
Let me look into that. I would assume so, since they're putting up a sign up now. Let me find out if it's going to be in the main room or a back room. I'll get back to you on that in just a minute.
Yeah.
But I think it's a main room.
Guys,
I'll let you know.
That will be at 12 p.m. on Friday. Okay, so 12 p.m. on Friday. And I will be making a big buying purchase. And I'm not doing it to flaunt money. That's not what it's about. Okay. I'm doing it because I want you to realize that not only do I have a lot of skin in the game, but I'm going to put more in, and I'm going to put more in at current price. Okay. A lot of you know I own Bitcoin well below 5,000, well below 5,000. I want to, but I'm going to go in and I'm going to pick a cryptocurrency. I'm going to make a major purchase. I'm going to talk about the other ones. Some other cryptos I'm going to be doing major purchases on throughout the rest of maybe this month, maybe falling into next month. But I'm seeing some stuff here that I like, and I want to show you that it doesn't have to take the kind of money that I'm going to put in on Friday. It could take a lot less. But I just want to make sure that you all know that I'm not just out here saying buy crypto, buy this coin, buy that coin. Okay. I'm in there with you, and I'm in there with you in a big way. So, besides that, Eric, I'm going to talk about the next adoption wave. All right, we're going to talk about some 10x gains. But I'm doing it on Friday, guys, because today is not my crypto day. I just want to let any of you know, if you want to talk about crypto, and yeah, you know what? So it's been, if you've been buying crypto over the last couple months, it's not been the easiest. I've been making purchases. I've been making, even with our alert services, I've been making time purchases. I have to say this. I've said it before. I'll say it again. When I started microcurrency trader, we were not even in the middle. We were at the beginning of a bear market, and we kicked it. It kicked it well. By the end of the year, fantastic. That was 2017, I believe. 2018, fantastic. 2019, 2020, fantastic. 2021, great too. 2022, so we're 3 weeks into the year, all right? You can't judge me by 3 weeks. You can't judge anybody by 3 weeks on something. Again, it's not about the day, the week, or the month, all right? But what I want to talk about right now, all right, we'll get into crypto Friday at noon if you want to join me, and I'll show you how to make a purchase on Coinbase. Then sign up. But tools. Let's talk about tools for a few minutes. So yesterday, and I'm not going to spend too much time on this part, but yesterday I shared with you a place where you can get some free tools that I share with everybody, absolutely free right now. iOS Store, Google Play Store. You can go out and download, just do a scan for Tom's Option Tools. Okay, Tom's Option Tools. And it's a free download. Now, a lot of the stuff that's in there, like our Darknet, Money Counter, Cash Clock, Microcurrency Trader, Velocity, these are all this is a suite of apps. Majority of the apps are for our lifetime members. But the morning report, that's something all of us in here can use. I'm going to utilize the morning report right now, and we're going to talk about a particular strategy session. So our morning report, and you all of you in the room have access to this, all right? It gives you, and it's updated every day. The lists are updated every day. What kind of lists do we have? High volume, high open interest, unusual calls, puts, also cheap and expensive IV. Now, I rank cheap and expensive IV a little differently than the average trader might. Average trader might come in and say, what's the most expensive IV there is? Okay. And that can be something that could have a couple hundred points on it. But that actually could be the low end of an IV. I measure IV like you would measure the weather throughout the year. What's the coldest day on record? Or what's the coldest day in the last year for Florida? What's the hottest day in the last year for Florida? And what's the temperature right now? I do the exact same thing with options. So what I'm looking for is those very, very hot, very, very expensive options. Okay, so that's what we're going to do. I mean, there's tons of different things you can do with the morning report. But IV is one of the main components when you look at all of this. In fact, 4 of the 6 lists that you see here, I'm looking at some form of IV. But 2 of the 6, I'm looking at expensive and I'm looking at cheap. Yesterday we looked at cheap, right? Today we're going to look at expensive. And I want to talk about selling options on expensive IV because by nature, volatility is a wasting asset, right? Volatility on an option will always go to 0 by expiration. What will that be replaced with? It'll be replaced with an option that's worth nothing or worth intrinsic value. Now, what I like to do is going in before that. I like to see stuff that has high implied volatility, that we're looking at some sort of pattern that might push it lower, faster than expiration. So when it comes to premium selling, there are 3 things that stand out in my mind. Number 1, I want to generate income. Right? When you sell premium, you're out there looking to generate income. All right, you're looking to get paid immediately. I'm going to share with you how we can do that with what I'm going to call my top trade here in just a few minutes. But we're looking to generate income. Is it possible that we can generate income and acquire shares in an underlying issue at the same time? Yes, and that's number 2 when it comes to premium selling. And number 3 is that we can also, by premium selling, speculate on price. And by speculating on price, I'm talking about either naked calls or naked puts. Now, when you buy a call, you have the right but not the obligation to buy the underlying stock. If I'm on the other side of that trade and I'm selling that call to you, I'm obligated to deliver that stock to you if you want it, right? Same with puts. If you're buying a put, you're bearish. You are looking for the right to sell the underlying security at the price on or before expiration day. If I'm selling that put to you, then first of all, I'm convinced that you're wrong and I'm right, okay? Because if you're bearish on the put and I'm selling it to you, well, I'm neutral to bullish. But here's the thing. I'm obligated. I'm obligated to buy that stock from you if you decide to exercise the put. Now, within all this premium, so there's a lot of reasons IV will be more expensive than usual. It could be an upcoming earnings report. It could be, I know that this stock, Activision Blizzard, has been mentioned over a dozen times in the last 2 days, right? You're hearing me mentioning it first right now. This is the first time I'm mentioning it. All right, so we saw Activision Blizzard being bought by Microsoft now for cash. And if you saw what was going on with Activision Blizzard a day or two earlier, the IV was quite high. And then once that announcement was made, we saw the IV drop very, very hard. Because guess what? Now, there's no unknown of where Activision Blizzard's going. It's being bought for cash at a set dollar amount. So Activision Blizzard should move very, very little between now and the time that deal is done. So why speculate on something that's not going to move? And that's why you saw the IV drop so hard, because there's no reason to speculate on that one anymore. And so we're all moving into different stocks. So a kind of big reasons, takeovers. If there's an FDA approval or an FDA potential approval on a drug that is offered by a publicly traded company, that's another reason why, coming right up before that FDA announcement, you can see an IV get very, very high on both sides, on the calls and the puts. So let's go into our strategy session right now. Let's talk about the expensive options. So I'm going to go right in here. And my expensive options for the day, I've got them. I'm going to load them up right now. Here they are. Expensive IV. Look at Activision Blizzard all the way at the top here. Remember, that was coming into yesterday. That deal is done, right? So you're going to see that drop very, very hard today. Peloton, I have a check mark on because look at it. So I'm looking at, this is the last year. The high for the last year was 99.17. In the last year that we've looked and analyzed implied volatility on near money calls and puts for Peloton, this is the high. The low was 49.93. Look at the current, 99.17. It's exactly the same as the high. It means that Peloton is now showing some extremely high options volatility. If I click on the symbol here, you'll see what I'm talking about. Stock price has dropped, as you can see. In fact, it's coming down into new lows again, trading right down here near 30. That 29.66 is the new low for the day, or recently. Look at this IV. It's kind of gone up. Now, this was yesterday. It's dropped a little bit today, but you can see it's definitely trading up above 95 as we speak. Okay. I've also got XBI in here. Okay, that's the home builders index. Take a look here. You can see, biotech. No, my bad. Biotech index. Biotech index has gone from 135, right? This was back in November, down to 95. That is a big, big drop for biotech. And look what's happened to the IV. The IV's gone from the high 20s to the high 40s, now trading in the mid 40s. Biotech has definitely seen a drop where implied volatility and option traders are starting to show a little bit of tenseness, a little bit of panic there. All right, but our expensive IVs kind of round out into Netflix, PLD, STT, Zen, ISRG, Team, and DGX. Let's take a look at Netflix for a moment. All right. 51.34, 22.53, 51.34, sitting on its high as of yesterday. Take a look at Netflix and you're going to see a couple things. Look what Netflix's IV's done just since Christmas, right? You got that. Here's the chart. Here's Christmas time. Here's the holiday season. And here's the IV down here around 30. The IV jumped up to 52. It's come back quite a bit, and that's because it's trading in that inside bar. But don't believe for a second that this IV isn't going to come back, because the earnings are coming out tomorrow after the close. Right, so I'm expecting the IV on Netflix to stay high, to be extremely high. If you believe Netflix is coming into an area where we could see a bottom, if you like this stock as a buying opportunity, then what we could look at doing is something called cash secured put selling. Cash secured puts allow you to sell the puts and have the ability to acquire the stock, right? And we could take a look at that one. We'll take a look at that one right now. So what I would do is look at Netflix. I'm going to pop on over and pull up my homepage, and I'm going to go back to our stock option tools. Bye-bye crypto. We'll see you at 12 o'clock on Friday. Option chains. And I want to look at option chains on NFLX. Now, I'm going to be looking at this one tomorrow because I expect the implied volatility is even going to be higher. But take a look, for instance, at the February 18s. All right, Feb 18s, let's do an update. Now, all of these options are going to have higher than normal volatility right now because of the earnings report that's coming out tomorrow. But if you look at the Feb 18 options and you say to yourself, boy, I really like this, but I would like it even lower. I'd love to see this at around I'd love to own Netflix at $450 a share. So you could either place a limit order, a good till cancel limit order to buy Netflix at $4.50 or at $450, or you come over here and you can see that you're going to get paid somewhere between $6.50 to $6.85 a share to own Netflix at $450 per share. Now, you might not get it, okay? In order to get the stock actually has to trade at or below $450 by February 18th. But it's a high probability setup that we see here, right? So when I look at high IV strategies, some things I want to consider, okay? High IV strategies, I just talked about one, which is the naked put. Naked calls are another thing. Here's a problem with naked calls. They do offer you the premium just like puts, but you have unlimited risk to the upside. At least to the downside, I know my limitation. My limitation is 0, but what's the probability that Netflix is going to get to 0 between now and February 18th? I think that's a low probability outcome. Now, there are some other things that you could do that involve premium selling. Cash secured puts we talked about, and I'm going to show you a trade very soon using cash secured puts on a stock that you might not like, but you know me, I'm Mr. Contrarian. Another way you could do it is with covered calls. Now, we mentioned a couple weeks ago with the dogs of the Dow, one of the strategies was buying the dog and selling a long-term call option. That's covered calls, and I did that, and I'm not a big fan of covered call trading, but I showed that, and I did that in my own portfolio to show everybody how to take advantage of a dividend stock and still have options around it too. So I put options around this in the form of a covered call. I took in roughly about 10% of premium on the call options that I sold against the stock. And I have about 5%, give or take, maybe a little bit less, of potential dividends that I'm going to take on that stock, on those five Dow puppies, the Flying Five, over the course of the year. So that's another high IV strategy. But you can do high IV strategies on covered calls, where if you own the stock and you want to create some protection around it, while having the chance of giving it up too, covered calls are a great strategy as well. There's one more that you can do that will allow you to take advantage of high probability, high volatility, but low cost and lower risk. And that is a call or put credit spread. Call and put credit spreads are a way of putting your trade on and allowing you to do just that, to take advantage of the high probability with Netflix, but maybe instead you're selling the 450 put and maybe you're buying the 440 put. You know, take a couple points in to do that. But now if Netflix goes down into the 300s or the 200s, you're not on the hook for hundreds of dollars a share loss like you would be if you ended up owning a stock. Now, each of these particular option strategies have different clearance levels with your broker. So some of them have level 1 clearance, all right? Some of them have level 4. It depends on what you're trading and whether or not you're trading on margin. And they all do have some sort of margin except for the covered call. Covered call doesn't have margin because you're already covering yourself, right? The one thing they all have in common is every single one of those strategies I just mentioned to you allow you to collect credit up front, okay? Remember, time value is always a wasting asset. So the one guarantee you can get out of selling premium is that IV, that volatility, that time premium will guarantee to go to zero. The part that's not the guarantee is where is the stock price going to be. So back again, if you look at the names I had on the report with you, the ones that stood out in my mind, Netflix, and the other one that stood out in my mind was Peloton. You know, Peloton is that new technology clothes hanger that a lot of us have, right? I got to tell you, Eric, I have a Peloton. I got, all these this exercise equipment. I ended up getting it, and the part that I have in my head is that it's for my wife because she loves the treadmill. She loves the treadmill. She's on that thing just going crazy.
That's
and
great.
And then I thought, okay, she'll do the Peloton. She did the Peloton. She said, "This thing hurts my ass." Can I say that? Can I say that in our closed end?
You could say that. That's okay.
I'm like, no. I said, I used to ride. I rode bikes. I rode Cannondales, in my 20s and 30s. And that was, because I didn't have a bike. If I wanted to get on a bike, I got on a bike and I went outside. In fact, I still have a Cannondale, and I got something else in the garage. And the tires are flat. But I jumped on the Peloton, and she was right. It hurt my ass too. Maybe I need to add a cushion to it or something. I didn't want to customize the Peloton. I wanted to use it for what it was for. And now we use it for what a lot of people use it for. It's something that sits in the room. But the one thing Peloton kind of has that a lot of the other cycles, those spin cycles don't have is that you don't have to leave your house. You can go live, and you can go live with somebody. And they are motivators. They're great motivators. In fact, I was planning on doing one of my shows while riding a Peloton. What do you think about that, Eric?
I think that you just set that in stone right there, Tom. I think we have to do it now.
I think I've got to move some of my equipment into the exercise room, and then I can get on that thing and go. Can I do it for a full hour and talk at the same time? I don't know.
You could do it. What we have to do, it
I
has to
just
be a
came out
light
of
show.
COVID, man. I haven't been on a bike. I haven't been on a treadmill in months now. Because here, it was always the excuse. It was December. Oh, it's a holiday season. Oh, I'm eating too much. Oh, now I got COVID I had COVID for a couple of weeks. I'm in the 90 percentile of getting back to 100%, but I'm definitely a little bit fatigued.
What we could do? We could do a half an hour question and answer show, so you don't have to look over too many charts, and you could just kind of engage with the chat. I'll feed you some stuff. You could pedal away. That'll be a fun show. I think we should do it.
That's great. Hey, by the way, guys, look what's happened in the last hour. The markets have flipped positive too. If you've been so busy gleaming at me and Eric and charts, we've seen a turnaround. We turn a little, big turnaround, a little turnaround. Dow's up a little, S&P's back up to positive, and the Nasdaq's flipped to now being, instead of down 0.5%, up 0.4. And of course, any of you that are long instruments in those areas, you're probably seeing some moves in the right direction. But you know what? Speaking of questions, Eric, why don't you throw some Q&A my way?
Yeah, let's do that. So first of all, one question that came through, I didn't screenshot it or anything like that, but we did get the question, is it Tom Gentile or Tom Gentile? And they were calling out Mark Sebastian for saying Gentile. So how do you actually say your name?
First of all, Mark is correct in the sense that Mark's a Pennsylvania native. All right. I am too. I was born in Forest Hills. All right. Outside of Pittsburgh. Grew up in Forest Hills as a kid. So we were referred to as Gentile. In fact, if you go back to Italy, you go back to my grandfather, it was Gentile. All right. Because that's Italian. But it went from Gentile to Gentile to Gentile when my father moved us. So my father was a civil engineer, so he worked for the state. So we moved around. I was a professional new kid in school. When I became a teenager, every year until I got into high school, and I mean 13, 14, 15, for about 4 or 5 years, we were in a different state because he worked for the state. And it wasn't one state, it was a good half a dozen states. So it was in Pennsylvania. We lived in Oklahoma for a little while. We lived in Texas. And then I hit pretty much every state. Oh no, we skipped Louisiana. So any of you live in Louisiana, we drove past you. But Mississippi, Alabama, and then Georgia. And here I am in Florida. So and of course I've lived in New York too. It's kind of amazing. When we got down into the South, it's funny. So many people said Gentile that's how it became. And that's just, how I use it today. But Mark was right, actually.
All right. So really there is no wrong there. No one could get in trouble for saying it wrong.
Nah.
But we did get another question.
I got neighbors that don't even know me, which is great. Hey, you.
There you go. I mean,
excuse me. That's my name.
Isn't big enough
and you know what?
Yeah.
When I'm doing something wrong in the house, I'm referred to as somebody. Somebody left the refrigerator door open. Somebody took the last yogurt. So I'm somebody in my family. I'm
Tom,
not a nobody. I'm a somebody.
Yeah, you could be called a lot worse than somebody in the house. But here, we got this question from Dave, also from PA. He says, Eric, my dad. Now, I want to let you know, Tom, tons of questions that were coming through were all about cryptocurrency. And I know that we're trying to keep it to a show that's not focused on crypto, but
yeah.
Dave said, my dad is extremely speculative about crypto, and I sent a message yesterday hoping, if at all possible, Tom might put dad's mind at ease with the microcurrency market.
Yeah. Okay. So, I want to talk a little bit about this on Friday, and for all the rest of you that had questions, I'm going to get to questions Friday and or Monday. So I know what's going to happen. I got something I got to do on Friday, and I really want to go through and I want to show you guys how to buy, why I like Coinbase as much or better than a brokerage account. I mean, having Coinbase is like having a bank. It's got bank security. But if I don't get to all of your other questions on Friday, if you're there, Monday, Eric, we're going to set aside some major time for questions when we do alternative wealth right here in this room. Okay, so that being said, set your mind at ease. Okay, so I'm not quite sure how to answer that, but I will say this. Bitcoin is, to me, I think it's quickly becoming one of the biggest stores of wealth that's out there. Okay, that's one thing. You're also seeing stocks like Mara. Okay, me and the research gang last night, because when the markets closed, and I'm somewhere between after dinner and sleepy time. I'm even talking to the boys, my sons, and we're talking about cryptocurrency. And one of the things that we noticed about crypto, which was interesting, is that there's companies like MicroStrategy and like Mara that have been really just honing in and coming into it where they're paralleling Bitcoin almost very, very well. But in the last couple of days, they dropped down and Bitcoin kind of bottomed. So, one thing you could look at is that, if you're a little nervous about Bitcoin, you could look at stocks like MARA or again, MSTR. These are some stocks that are paralleling crypto. And those are the most. I mean, someone will say, what about Coinbase? What about Riot? What about, all the other ones? What about Bido? Wouldn't touch it. But if you look at MARA or you look at a stock like MicroStrategy, they're tracking Bitcoin very, very well. And a lot of it's because of their holdings. Okay. But the other thing too, is that I found that Bitcoin was offering some very interesting buying opportunities for these. So it allows you to stay in that realm of the stock itself or the equity market itself without venturing into crypto. But there's nothing better when it comes to wanting to invest in crypto than investing in the actual asset itself. I'm going to talk about that, especially to those of you that are new, on Friday at noon. And again, we'll be doing some stuff Monday as well. So, hey, Eric, how about we get to our trade, our top trade of the day?
Yeah, I want to hear what you got for us here too, Tom.
So we're going to talk about Peloton. So Peloton, as you can see here, here's what's been going on with the stock. It's kind of sitting down here around 30. You got earnings coming out in 20 days. So if you really want to trade this and really trade it, February 8th is the estimated earnings. I'm going to be looking out past that. So what I want to do is I want to show you, in this case, here's the stock chart. One of the things we do with Rocket Wealth, which is really our put selling alert service, is we look at what we call probability cones. And we look at them on stocks that we feel are top industry stocks. Now, forget about the fact that this stock was trading a lot higher last year than it is now. Believe it or not, this is actually a good industry stock in the particular industry that they're in. The problem is was it worth $150 a share? What was it, 6-8 months ago? No. Is it becoming potentially a value? Possibly, right? Could we have the ability to pick this up below the price that it's at right now? Could I pick it up at 25? Is 25 the right price? Is 20 the right price? And so what we're looking at is I'm kind of moving along here in the stock and option category. And I see the February 2022, the February 18th. And I see that I could sell the 20s. And that gives me it obligates me to buy the stock at 20. And I could get 50 to 55 cents for that as of my last print. All right. But if I go out to March, those 20s are going for, well, they were going for around 86 cents. Where are they going for right now? All right. What are they, I mean, if I want to do it right now, what would they be going for? I'm going to show you guys. I'm actually going to put the trade. I'm going to place the trade because I'm not doing a market order on this. But let's type in Peloton and let's look at the puts. So I'm going to go into put. All right, Eric, do you see this on the screen?
We got you.
Gotcha. Good. All right. So when I sell puts, I sell to open. So I'm going to push sell to open. All right. Now, how many of these am I going to do? Well, I'm going to take a look and see. It all depends on what you want to potentially own. And if I go out to the 218s, now I'm not going to sell the 15 puts. You don't get anything for them. But the 20s, okay, so they're off. They're around 42 cents. So if I sold the 20s for 50 cents or better, then here's the thing. I'm going to get paid 50 cents. I'm going to get paid $50 for every 100 shares that I'm obligating myself at the price of 20. If that doesn't sound like a lot, then perhaps go out and look at the March 18s. The March 18 20 puts are trading around 72. These were in the 90s not too long ago. So I'm going to throw in a potential trade. Don't know if I'm going to get filled on this one, but if I could get $1 for these, and that was almost the case this morning. If I sell one, that's going to be for that's going to be for $100. If I sell 10 or 100 shares, if I sell 10, I'm obligated to buy 1,000 shares. If I sell 100, I'm obligated to buy 10,000 shares at $20 per share. I'm going to bring in $1 per share. So for one contract, that's $100. For 10 contracts, that's 1,000. For 100 contracts, that's 10,000. And so if I put that in as a limit order, then I now have a trade that, what's the risk on this trade? It's 10. If I did 100 of these, it's 10,000 shares at $20 a share. That's a $200,000 commitment. Okay. $20,000 commitment would be selling 10. Anyway, let's just put the sell 10 in there. And then I'm going to come over here. I'm going to click on preview. And then it's going to preview me. Now, if I sell 10, I'm going to bring in $1,000 less a little bit of exchange fees. And then my margin on this trade is going to be only $1,700. So if I like that and I place that order, now that order's been submitted. And now it's going to sit until one of two things happen. Either the close of the day, and it's going to cancel the order. It's a day only order. Or if it hits $1, I get filled. And then I have the trade on. Now, we do this with our Rocket Wealth strategy on a regular basis. We're finding one or two of these every single week, and we're finding two of these every single week in this earnings minutia we have right now. All right. We had one go on earlier today. If those of you are Rocket Wealth fanatics, then take a look at your email because we had one of them come out today. All right. So if you're interested in Rocket Wealth, you can join us. You know exactly how. I think we've had links on the screen. There was a phone number. If you want to call my team, if you have any questions about Rocket Wealth, you want them to give you the information on the strategy, track record, etc. Feel free to do that. We will be back at 1 o'clock, and we're going to talk about Rocket Wealth. We're going to get into the minutia, the closed trades that we've had recently, the open positions we've had, and the strategy itself, exactly what we do. So those of you that are with me on Rocket Wealth, feel free to join me. If you have any of our services, come on, because we're going to show you that. We're going to show you some of that Rocket Wealth as well. All right. Hey, Eric, I think it's time to slide to the right.
It's time to get out of here, man.
Step on out.
It is. Thanks for the show. And
right.
I don't think you're back live until that event on Friday, right?
No, I won't be. I'll be back on Friday at noon, guys. So come see me Friday at noon, and we'll talk cryptocurrency. All right.